We've got about 2.5 minutes left to trade. We're right near the session lows. We hit the session highs as the news at 2 p.m. came up with that 25 basis point rate hike, but we have lost momentum since then. There's the S&P 500 intraday chart. You can see that very clearly, that sell-off in the last couple of hours. The Dow is down 117 points. If we look at all four indices, the Dow is down the most, down 0.4%, S&P down 0.3%, NASDAQ down 0.2%. Let's have a look at how the Fed affected things this afternoon. Firstly, with the 10-year Treasury note. Initially, we did see yields slip a little bit. They then spiked, and they're now back down again at their lows, 3.05%. The yield, we were, of course, at 3.1% earlier in this week. Let's have a look at the sectors now and how they performed as we bring in Dom Chu as well to discuss the impact today on trade. And we'll see financials are lower because we've seen yield slippage and we've seen a flattening in the yield curve. The best performing sector is communication services, the new sector at the start of the week. And the consumer stocks doing okay as well, but not too significantly higher, Dom.
No, I mean, the red that you're seeing down there on the lower right-hand corner with financials, real estate, utilities, that's the standout there in terms of the way that things are playing out right now. I would also point out, if you want to accentuate the positive, healthcare and consumer discretionary, they are poised to get towards record high levels at this point. So there are leadership points in the market. It's just not the ones that you want to see on a big Fed day when interest rates are in question and financials, specifically regional banks, specifically the money center banks, are the ones that are starting to really lag the market. In fact, those two ETFs we mentioned so often that track those particular parts of the market are at session lows right now, down by 2%. So doubling up, if not more, the market's overall decline.
And as Rick Santelli was pointing out moments ago, the yield curve has flattened a little bit, not in a massive way. It's
2 basis points. It's 23 basis points versus 25 before.
But it's a worrying direction on a day when rates got hiked.
That's right. And so this idea that these banks would do better when those yield dynamics are more in play, right? When longer-term yields are higher, when shorter-term yields are lower, the banks make more money in that way. What is disconcerting overall, like you pointed out, is whether or not those financials can assert some kind of leadership. They are not doing so right now. It's not that they're terrible. They just aren't really doing much of anything, and this today is not really going to help matters much.
Communication services, Dom. Nice.
It's a new sector. Good first week for those guys out there. The FANG sector.
Good first week, but only up slightly, and the market itself down at the close, 114 points on the Dow. S&P down about 0.4% at the close.